So, okay, if they're blocking crypto out of the system and this is the banking system creaking at the seams, why is crypto rallying? Well, pretty straightforward. A, you can't get your money out. And we've seen this periodically, and that tends to keep money in circulation within that system. But secondly, crypto is a function of liquidity, and it's forward-looking. And I've been saying this for a long time, is the crypto markets figured out that, and much like the kind of long duration assets of technology, figured out that the Fed will have to pivot at some point. And that Fed pivot is positive for whether it's money supply growth or the Fed balance sheet over time. And that's why crypto does quite well in this environment and tends to outperform. We saw similar when the Fed stopped in 2018, December 2018. The next year, crypto was up 300%. Equities were up. Technology was up 25%. The S&P was up 15%. So net, there's a negative force of this forcing people out of crypto. There's a massive negative issue with what's going on in the banking system, and that will continue until they start cutting rates aggressively. And it's positive for risk assets over time because more cowbell. What is going on is there's been a flight of deposits leaving the smaller banks in the banking system. That amalgamated in Silicon Valley Bank and Signature Bank going under over the weekend, but an ongoing run on the banking system. Now, a run now has changed somewhat. Obviously, the authorities have stepped in and said that they will guarantee depositors and also help with the mismatch of duration, which is banks borrow short and lend long, but their bond portfolios are underwater, even though they're just invested in treasuries. And if depositors leave, they have to unwind some of that part, which is the long part, and they're underwater. So suddenly they create these huge losses, and that's the systemic problem that's going on. What was happening is people were being incentivized to flee because they're seeing what's going on, wondering, am I going to get my deposit back? So the answer is go to a different bank. JP Morgan wins the world as everybody moves over. So they tried to stop that, saying, hey, listen, your deposits are safe. So they've kind of underwritten the entire banking system and also underwritten these mark-to-market losses as deposits leave the system. Okay, all well and good. The issue is it's ongoing. This is not resolving the real problem, which is the deposits are still leaving the system. They're leaving the system for two reasons. One is economic slowdown. So everyone draws down on their cash balances over time. And secondly, the small banks are offering 0.5% interest rates on deposits, and CDs are offering 5%. So money just goes to the CDs. And so that's deposits leaving the system. And this continues. The reason why deposits are 0.5% and not 5% is the yield curve is so inverted. So therefore, they can't borrow short, lend long. So they have to kind of falsely create a yield curve where it's 0.5% so they can then lend it out. So that's the problem that they're facing. And that's why the banks remain under pressure today, because actually the issue is here. Strip out all of the idiosyncratic risks from all of the banks, is the yield curve is too inverted for the banking system to make money. And so the share prices remain under pressure and the depositors keep leaving. So what we end up with is negative equity in the banking system. So it's a bigger problem than people understand. My entire view here is that they're going to have to steepen the yield curve and cut rates and probably do QE as well. So I think that's on the cards to come. I know everybody thinks that inflation's sticky. I think a banking crisis is the single most important marker of a deflationary process, and is deflationary in its own right because bank lending reduces rapidly. So that slows down the economic growth. Also jobs start, people start getting laid off because there's no access to capital. So all of that process is underway. So, okay, if they're blocking crypto out of the system and this is the banking system creaking at the seams, why is crypto rallying? Well, pretty straightforward. A, you can't get your money out. And we've seen this periodically, and that tends to keep money in circulation within that system. But secondly, crypto is a function of liquidity, and it's forward-looking. And I've been saying this for a long time, is the crypto markets figured out that, and much like the kind of long duration assets of technology, figured out that the Fed will have to pivot at some point. And that Fed pivot is positive for whether it's money supply growth or the Fed balance sheet over time. And that's why crypto does quite well in this environment and tends to outperform. We saw similar when the Fed stopped in 2018, December 2018. The next year, crypto was up 300%. Equities were up. Technology was up 25%. The S&P was up 15%. So net, there's a negative force of this forcing people out of crypto. There's a massive negative issue with what's going on in the banking system, and that will continue until they start cutting rates aggressively. Well, the market's figured out the issue, which is that even if you underwrite the depositors, the problem still remains. CRE index keeps going down, the smaller banks index, the regional banks. So that doesn't stop. And the 2-year treasuries are like, yeah, you've screwed this up, rates are too tight. And that has to get unwound, because there's nothing like a banking crisis to tell you where the rates are at the wrong level. I mean, it's classic stuff, right? I've never seen a banking crisis without a rate cut, ever in history. I first got into Bitcoin in 2013 for this very reason, because I lived the European banking crisis, which is very similar to this. We realized that nothing we owned in banks was ours. And even if they backstop the system, it backstops it with monetary printing eventually. So that lowers the value of your assets over time. So you're kind of trapped into this. So Bitcoin was the answer that I saw then, and that's why I got into the whole thing at that time. That case is still here. Now, they have guaranteed the deposit base, so it's not as obvious that you're going to lose your money by keeping it in the banking system. So it's not a no-brainer, but the understanding that to offset what they're doing, right, there's always a payment for something here. An eventual payment comes down the line is that it'll end up on the Fed balance sheet, and or monetary easing, and therefore scarce supply assets tend to do better. And so crypto does well. So yes, I mean, it's exactly what it was built for. I mean, don't forget, in the white paper itself was the thing about the governors bailing out the banking system. Again, these aren't bailouts, but they're still a use of monetary policy to paper over cracks in the banking system, which is still comes down to the one thing, is we have too much debt. Yeah, this is exactly, we've been doing this whole series of how to unfuck your future. The part of why the future is so screwed up is because of the leverage. And the leverage is a function of demographics. The leverage is a function of a number of things that we've gone through on Real Vision. The point being is digital assets have a role within this. They're not for everybody, but this is a crypto show, so a lot of people watching this are actually interested. Other people will find other ways to navigate this. Some people will traditionally use gold, and that should be fine too. Keep your eye on the situation as it evolves, not your coins. Keep everything as you can out of the system. Realize that they're trying to close the fiat on-ramps and off-ramps as well to crypto, because that's another part of this whole equation. So just make sure you're all set up and carefully balanced for what comes out.